Now, if we get a good bear bar 73, is it worth shorting? Will the bulls give up, and will we get back down to the midpoint of the day's range? It's possible, but we have 6 consecutive bull bars, 7 consecutive bull bars, so it's a low probability bet. So am I going to short below 73? I'm not going to. You can argue parabolic wedge, 66, pause, 68, pause, 70, and then a third leg up, nested within a bigger wedge, 1, 2, 3, or 1, 2, 3. Good for the bears, but a lot of bull bars, not many bear bars. Tight channel, small pullbacks. To make money, you need a bigger pullback, and that's not what we've had for the second half of the day. Outside down, but nobody wanted to sell it. Bulls try to get a high 174, but top of the channel, and we're running out of time, and we're probably not going to get up there, so there's probably not much up. And after several bull bars in a very tight bull channel like this, we're probably not going down very much. So we may not have any other trades today. Very difficult to structure a trade right now. I won, but the target is probably too far above, so I'm not sure the math is worth it. We're closer to the midpoint of the day than we are to the high of the day, and both are magnets. The bulls are trying, the bears will try to stop them, so there's a slightly increased chance of a big move at the end in the final few bars, either a race up here or a race down here. Not great math. You can see how it would be difficult to trade here. You know, selling below anything is bad, especially below bull bars. And you have a high 174, and it just went up a couple points and reversed down fairly sharply, 77. So really difficult to structure a trade that makes sense. Sometimes you'll get a big pop, so you'll take a buy and it quickly goes up 10 points. But that's the, I don't know, 1 chance out of 10. So the math is not very good. Overall, I think a good day for the bulls. Yeah, we sold off hard for the first half of the day, but we reversed more than half of it. There's still time left. We could still get down to the midpoint of the day. And I think the 2 important things are the daily chart, 11 days without a pullback. Traders will buy the first pullback, and you can see when we went below Friday's low, traders bought it. So that makes sense. If it's up for 11 days, traders will buy the first pullback. And then 60-minute chart, 70 bars without touching the moving average. So traders are very eager to buy. They're willing to pay above the average price for a long time. There are some traders who only want to buy at the average price. So when they finally had their opportunity, they bought today. And the traders buying above the average price, they also bought the pullback. So most of the selling, who sold this? Some bears, right? I was short in my overnight account. So some bears sold, but they were betting on a minor reversal, a pullback. They got the pullback and they bought back the shorts. So the bears are sold looking for a quick trade. Most of the selling is the bulls. If you're a hedge fund trader, or if you work for any institution and you are long, your stop is far below. And so if you're on the daily chart, where's your stop? Maybe all the way down here. And the easiest way to reduce your risk is to reduce your position size. So when the stop gets far below, you'll get some profit taking. And that's what happens in the strongest trends. At some point, the risk is too great, and to reduce the risk, the bulls reduce their position size. Opposite is true in a bear trend. If you do get a trend reversal, it always begins with profit taking, long covering, in a bear trend, short covering. If enough bulls take profits, and if they take the profits aggressively, it'll encourage bears that were going lower, and they'll start to sell, and all of a sudden you can go from a bull trend to a bear trend. More often, a bull trend has to transition into a trading range, and then the market decides whether the bull trend will resume. Will the trading range be a bull flag, or will the bull trend reverse? Will there be some kind of a double top in the trading range and then a trend reversal? A trading range is always more likely to break out in the direction of the trend. If the trading range lasts a long time, 30, 40, 50 bars, then it gets to about 50-50. But if the trading range is 10 or 20 bars, it's still more likely to have a bull breakout. 11-bar bull microchannel, they bought the low of the prior bar, Friday's low. 60-minute moving average, 70 bars above the moving average. They bought the moving average, and they bought a reversal up. 5-minute chart, we had an extremely strong bull trend day, Friday, a buy climax day, and 75% chance after a buy climax day that we're going to get a couple hours of sideways to down trading that begins by the end of the second hour. And here we had a couple hours of down trading, 3 hours of down trading that began with the first bar. First bar of the day, a bear bar closing near its low, unable to break above Friday's high, all-time high. And I said some traders would take a chance and sell that. Some would wait for 2 bear bars, and then some would sell below the low 1.3 or the low 1.5, taking a chance. Usually when you get these sell-offs in a bull trend, the market transitions into a trading range. So traders are looking for a bottom, and the bulls are quick to get in. Bears, if they're short, are quick to get out. The bulls tried to get a wedge bottom here at 8.248, but 3 bear bars, and it did not trigger the buy. It did not go above 8. And so we get a bear bar. So bears would sell below 8. 10, another bear bar. It's probably sell the close. It's probably always in short by the close of 2. If a bear got out above a bear bar, bar 3, and he's trading always in, he'd sell again below bear bar 5. Now we got a pair of pretty good bear bars, 10 and 11. The market often tries to reverse right before the end of the hour, so that would be bar 12. And the bulls got an outside, what do they get? They get a decent bull bar, but instead of going above 12, we went below 12. And not only did we go below 12, we went below 12 with a surprisingly big bear bar. So at this point, we're probably going down to the 60-minute moving average. And it's a big enough bar, big enough surprise, we should get a couple legs sideways to down. Bulls try to get a reversal 14. It's a second leg down, 10, 11. I said we get a second leg down, and 13 qualifies, but it did not go above 14 or 15. For the bears, it's another low 1. You can call it a double top, 12, 14 or 12, 15. We're getting a lot of climactic selling. Every big trend bar is a sell climax. So we have 2 here, so a sell climax, and then here, 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 and here. And the bears were hoping that this lasts all day. But whenever you have a series of sell climaxes and the bulls keep coming back, bull bar, bull bar, bull bar, bull bar, and we're getting bigger bull bars, it's probably not going to last all day. So, I don't know if it'll last a couple hours or it'll last halfway through the day, bar 40 or more. But when you get this kind of climactic selling, wave after wave of climactic selling, at some point the bears get exhausted. They take profits and don't look to sell again for a couple legs and usually at least a couple hours. So most often when you get this kind of series of sell climaxes on the open, you're going to evolve into a trading range, or you're going to get a bull trend reversal, or a combination of both. Today we had a bull trend reversal, but it did not get all the way back up to the open. However, it's still pretty impressive. So 15, it's a low 1, not a great sell. And then 18, 3 more bear bars, bear surprise. We're right at the 60-minute moving average. So there will be some profit takers here. We may go down another bar or 2, but there will be bears taking profits here. And there will be 20 gap bar bulls buying here on the 60-minute chart. So not a lot more down here. Outside up 20, possible low of the day. So some bulls will buy above 20, but with the 4 bear bars, it's probably a minor reversal. So not a strong buy. With the 4 bear bars, I don't know, you could take the buy, especially if you can use a wide stop and scale in, but I think it's not ideal. Did not trigger. I think the 20 high went above the 14 low. It's hard to see here, but I'm pretty sure that it did. So we had the 14 high going above the 12 low and the 20 high going above the 14 low. So bulls are starting to make money. Why does it go above the low and then reverse down? Bulls have taken profits. They buy the 12 low, the 11 low, buy more, 1, 2, 3, 4 points lower. And then once it gets back to that 12 low, they sell. Same with 14. They buy the 14 low or the 15 low and buy more lower. And once it gets back to that 14 low, they sell. They get out break even on their first buy with a profit on their lower buys. 21, another low one, but we're at the 60-minute moving average. I suspect we'll get at least a couple legs sideways to up, so I'm not willing to take the short. You can see they bought the 20 low, a tail on 22, close above the 20 low. And for the bulls, they have an inside bar 23, so a high to 19, but 19 and 23 are bear bars, so not a strong buy. Then we got an outside up on 24, a pretty good bull bar. And now we have a micro wedge 20, 22, 24. This is a candidate for the low of the day. So it's reasonable to buy above 24, especially if you can use a wide stop and buy more below 24. But it's a really tight bear channel. So if we do go up here, it'll probably be a minor reversal. So the bulls will be quick to take profits as soon as they become disappointed. Bears, I'd get out of shorts above 23 or 24. 25, an entry bar, but not very big, fairly conspicuous tail. And 26, a third consecutive bull bar, but the bodies are shrinking. So we're getting some loss of momentum, fewer buyers as we go up. So bulls, I'd get out a point or so below a bull bar. I'd get out a tick below a bear bar. And 27 is a bear bar. I did not short below 27. I thought the reversal up was good enough so that we would try to get a higher low and a second leg up. But I said that if it goes below 24, there probably will be buyers below. However, it's difficult to place a limit order at the 24 low and then buy more, 2 points, 4 points lower. Most traders would screw up and get out with a loss right at a time when they should be adding on. So reasonable to buy above 24, but most traders should get out below 27. Bears, double top bear flag 20 at the moving average, but we're trying to bottom at the 60-minute moving average. So I'm not willing to sell. I'm looking to buy. And then we have an II30. So it's a sell signal bar. The bears hope that 27, 28 is a resumption of the bear trend, and that 30 is a bear flag, a low one sell. And the bulls are hoping that 30 is a higher low major trend reversal. We got a decent bear breakout, but it's reasonable to be flat. Not long. It's reasonable to be short, but I don't think we're going down much more. We're stalling at the 60-minute moving average. And I think we're going to stop going down and either enter a trading range or get a reversal. Pair of big bear bars 31, 32. Big enough bear surprise, probably we'll get at least a small second leg down. So 33. Even though it's a lower low major trend reversal, it has a tail, 2 big bear bars, probably sellers above, probably going down a little bit more. For the bears, it's a low one, but I think we're trying to bottom since 20 around the 60-minute moving average, since 14 for that matter. So I don't want to be selling at the low, probably buyers not far below. And then 35, a micro double bottom, 32, a lower low major trend reversal. A decent buy signal bar. It's a credible buy signal. At this point, I think either this is the low or we'll get one more leg down and form a wedge. But I think there'll be buyers below 35. And I would wait to sell until after we get a couple legs sideways to almost an II30 39. And it's probably a triangle on a smaller time frame chart. For the bulls, it's a small higher low, a high 235. It's still on the 35 buy. 40 closing near its high. You can buy about 40. 42, we have 3 bull bars closing near their highs, and we have a close above the moving average. I think we're always in long. I don't know how high up we go, maybe 26 high. Bulls are hoping that we get all the way up to the high of the day, but the selling is so extreme that I don't think we'll make it to the high of the day. Might make it to the midpoint, might make it to the 26 high, but I don't think we'll get all the way up there. I won 44. I think that was about, I forgot, it was about 10 bar bull micro channel, 44, 45. Excuse me. Bears getting a reversal, 47, a double top, 26, but a small pullback bull trend, virtually no pullbacks. So I don't want to sell. 48, a high 1. There might be sellers, 47 high, or around the 50% pullback. But when a channel is as tight as this is, and with the absence of strong bear bars, it's better to only look to buy. And then a high 149, but tight trading range, not all that good, but always in long. And the bulls, if they were long, would they get out below 47? In that kind of a situation, I would not. I would get out maybe a point or two below 47, so the bulls are still long, and aggressive bulls will buy 49. And then break out 51, follow through 52. So it looks like we're going higher. We should get to the midpoint of the day. I don't think we'll get to the high of the day, but we might. 56, excuse me, a low 247, but 6 bars without a bear body, low probability short, and then a high 157, but a third leg up, 47, 56, in a bear bar and at the midpoint of the day's range. So that's probably not a very strong buy. Well, 59, no bear body, so that's follow through. So we might go a little higher. I'm not sure if we're going a lot higher. And then bigger bar 61, possible parabolic wedge 47, 56, 3 legs up in a tight channel. And but I think it'll be a minor reversal because the channel is so tight. Reasonable to get out of longs, a point below bull bar 61, a tick below a bear bar closing below its midpoint 62, but not a very good short. 64, a high 1, but 3 bear bars. Probably we'll get a couple legs sideways to down after the parabolic wedge. So probably sellers above 63 or 64. Outside down 65, but will the bears get follow through? Instead, we got a bull reversal, IOI at the moving average, high 2. With the 4 bear bars, I'm not sure that it's worth taking the buy, but we went higher. So 68, 3 bull bars closing on its high, 68. Looks like we're going higher. Might get a wedge, 26, 61. But 7 bull bars, 73. I think it's not worth shorting. Reasonable to get out of longs. For stop entry traders today, below 1 is okay. Higher probability, probably below 3 or 5. It's probably sell the close. Well, you could argue sell the close 1 and 2, but certainly by 7. Low 1, 9. I think we're going to try to get a reversal, but if you're willing to trade for a swing, you can sell. We may go down for an hour or two. We went down for 3 hours. 16 consecutive bear bars, but tail, not a great short. 12, a low 1, but a bull bar, not a great short, and just above Friday's low. Bulls unable to get trigger the buy above 14 or 15. So for stop entry traders, maybe below 1, below 3, below 5, below 7, below 10, less good because of the tail. Below 12, not great. Below 13, a bigger bar, sell climax, not great. Maybe below 17, below 18, but we're right at the target, so not a great sell. 18, 19, outside up. What about 21, a low 1? I think we're going to try a bottom here. So if you sell below 21 and you see 22 or 23, you're disappointed, so you'll probably buy back your shorts around break even. 24 possible low of the day, so reasonable to buy above 24. 25, to me, it's kind of disappointing, a smaller bar with a tail, so I would not buy above 25. If the traders bought above 24, disappointed 25, I'd get out of longs below 20, disappointed 27, I'd get out of longs below 27. In the II-36, the II-30. Remember, I'm reading on a 13-inch monitor, and all these numbers are really tiny on my computer screen, so I sometimes misread them. So the II-30, I think we're trying to bottom, so you can sell it, but I think we're not going down too far. I thought 35 was probably the single best stop order trade of the day, and then maybe above 40. In fact, I'm pretty sure I bought both. I think I bought above 35 and then bought more above 40. And then by the close, 41, 42 for sure, 43 consecutive bull bars closing on their highs and above the moving average. Not a big breakout above the moving average, but probably enough for at least slightly higher prices. 45, not great. 49, not great. 51 breakout, 52 follow through, so it's more by the close. 52, 53 above 53, above 55. 57, I would not sell below 56. 58, is it by the close? Well, you get a bull bar 58 and no bear bar 59, so that's follow through, so it still should go higher, so it's still by the close. 60, probably sellers above 64. I would not sell below 64. I don't think we're going down much. And then a high 2 at the moving average, 66. Some bulls will buy that. Some will wait for the follow through, 67, 68. Inside bar, high 1, 70, and 74. I would not take it. Limit order traders, probably sellers above 3, and possibly buyers below 12. They ended up making money. Probably buyers below 15 as well. But what do you do if you buy below 15? Right? You buy more below 14, you buy more above 24, and 26 does not get to the 15 low. It gets to the 14 low, right? So you could probably end up getting out break even if you manage the trade correctly. Probably buyers below 23, a third leg down, 20, 22, and only a doji bar at support, 60-minute moving average. 33, a low one, but a bull bar, possible lower low, major trend reversal. Probably buyers below 33 and high probability of buyers below 36 and below 35. Did not go below 35. 44, 5 consecutive bull bars, always in long by the close, so buyers below 44. Possibly buyers below 47 because of a weak sell. And then up in here, can you sell the 57 high and scale in higher, a third leg up? You can, but it's such a tight bull channel. The pullbacks are so small. I think it's better only to buy. 64, probably sellers above. 72, probably buyers below, but we're getting late in the day for limit orders. Overall, I think a good day for the bulls. Even though we sold off strongly, it was simply a pullback to the 60-minute moving average and a relief from the 11-bar bull microchannel. So it's more technical, more profit taking from the bulls, and then they bought back when they had a chance. Where do we go from here? We closed above the midpoint of the day, good for the bulls. We triggered a buy signal on the 60-minute chart, a pullback to the moving average. There were buyers below Friday's low, a bull bar, 11-bar bull microchannel, but we had a pretty big sell-off, and we might get a second leg sideways to down. So I think we're probably going to go sideways for at least another day or so. On the daily chart, today's a high 1 buy signal bar, or a bear body and a buy climax, so might be sellers above. Today's range is fairly big, and we closed in the middle third of the range. Tomorrow could completely overlap today. We have big up there, big down here, big up here. So big confusion increases the chances of sideways. So I suspect that without knowing anything else, I suspect that tomorrow will start to evolve into a trading range. The question, I often find myself buying what ends up being a strong bear trend like today, such as buying the 4 low and the 8 low. Worse is that every pullback after a move traps me out, as it always seems to. It seems too climactic and too late to enter, or more likely to be a trading range. How do you use to deal with problems like this? So he said he bought the 4 low bull bar and the 8 low. Both are reasonable. Bull's trying to get a wedge bottom. To me, that's kind of a Forrest Gump type of situation. What he did was reasonable, betting that we would convert into a trading range. Very strong rally Friday. Maybe a trading range around the 50 low. We're trying to bottom. So he bought the 4 low, bought the 8 low. My general rule is if you get consecutive decent-sized bear bars with one of them closing near their lows, we're probably going to get some kind of a measured move down. If you're trying to bottom 8 and instead you get a big breakout, 9 or 9, 10, or 10, 11, when I see that, I typically want to sell that 11 close. And I don't remember if I sold the 11 close today. I might have. In a bottom attempt. I probably did not because I too was looking for a bottom. But in general, if the market's trying to bottom and then you get consecutive bear bars breaking out below the bottom, instead of a bottom, you're probably going to get at least enough of a move down to make up for any losses that you had earlier. In terms of what to do to prevent that from happening in the future, the single best thing is, especially in the first couple of hours, only enter with stop orders. Just do the Forrest Gump thing. Don't buy unless you have a credible stop. Maybe buy above 8, maybe buy above 4. Well, those buys didn't trigger. Buy above 12, buy above 14. None of those buys triggered. But what I would do in a situation like that is I would, for the first couple of hours, only enter with stop orders and do it like Forrest Gump, right? If you're not getting buys, but you are getting sells, you just sell on a stop below the lower bar, like below 5 or below 9 or below 3. And if you sell below 5, put a stop above 4 and just hold on until you're disappointed. And you really didn't get stopped out until above 24. So, you would have ended up with, 15 points or more. Also, in a situation like that, I think it's good if you're able to add on, let's say you sell below 5, and you're still short, you can get out above 8, did not go above 8, you could sell more below 9 and possibly buy back the whole position above 8. So that's another way to handle it. But my first reaction is on the open, even though a trading range is likely, it's better just to wait for a decent stop order setup. And in general, open there's an increased chance of a swing trade, and it can be either way. If you get a bear breakout like today, 50% chance it will reverse, but 50% chance it will not. And today was the 50% chance it did not. So I don't want to be scaling in too early. I'd rather wait until I see that we have a trading range open before buying with limit orders at the bottom of a bear trend. So my recommendation is just try to stick with stop orders. And if it's hard to sell below bars, below 5, below 9, just wait for a credible buy. Above 24, get out below 27, and then buy again 35, put a stop below 35. And if you did that and you held until there was a credible reversal, you basically would be holding until here, and you'd have about 20 points. Okay, that's it for questions. I think big reversals, big up here, big down here, and big up here, we're probably starting to go sideways. I do think we're going to go higher, but a couple thoughts about that. Will we get to the top of the channel? That's around 44.50. Will we get here, a measured move based on this double top, 4,400? I think we will, but will this leg get us there without more than a 3-day pullback? I don't know. I think we're going higher. I think we get up to 4,400 without more than a 3-day pullback. But beyond that, I don't know. And a couple other points I want to make. Okay, look at this green line. This is the daily E-mini chart. Look at this green line. It's last year's close. And most years, if the market trends up or down, after the first few months, it tries to get back and test last year's close. That might be too far for the market to get there, but we might get down and test last year's close. Let me see if I have that written in correctly. 29.25. So that's the close of last year. So that's just something to keep in mind, that even though it's 15% below, the market tends to test important prices. Now, I don't know if you pay attention to Tesla. I talked about it back at the time. Here is the day that it got added to the S&P 500. And I said that there might be some profit taking. A lot of firms, a lot of institutions had to buy it because they tried to copy the S&P 500. And part of this was because institutions thought it was going to be in the S&P 500. And then we get this big breakout. However, look what happened. What have we been doing over the past 5 months? We've been oscillating around that red line. And what's that red line? That is the day when the S&P got added to the, that's the day when Tesla got added to the S&P 500. So a lot of times markets will pay attention to key prices, like the day it gets added to the S&P 500, or the IPO price. That's another thing that markets will often watch for a year or two. That was the case with Uber and Lyft. They rallied and then they went all the way back down to their IPO prices. But they've since rallied again. I don't have the IPO price written in here on Uber. Oh, here it is right here. So the IPO price is 46. We fell to less than half and then rallied back above it. You can see this breakout breaking back above the IPO price. So probably a lot more trading range trading today. Okay, hope everybody has a good night. A lot more trading range trading tomorrow.